Ladies and gentlemen, my name is Jim Cirenza from D&B. It's my pleasure to be here with the LPG panel today. Thank you. With me today, Anders Onarheim, CEO of BWLPG, Aleksander Giertsen, head of LPG at Fearnleys, and Peter Zacho, CEO of Navigator. Before we get started, I'd like to give a little bit of background history, and the LPG sector is not ancient history, it's relatively modern history. Navigator, a little over a decade ago, was the first one to go public in a form different than the form today. Then in 2013, BWLPG IPO'd, and then a few months later, we had the IPOs of both Avance Gas and Dorian, both within the VLGC, the large segment. And then in 2014, we saw day rates reach $100,000 a day, which most people thought could never happen. And then we had a perfect storm. So from 2014 to 2016, the LPG fleet, certainly the VLGC fleet, virtually doubled. The oil price and the LPG prices collapsed, and then they roughly doubled the size of the Panama Canal, making it big enough for a VLGC to go through. And so what we've seen since 2016 is a sector which has traded at the biggest discount to NAV of any shipping segment. That is also true as of today. As I checked my email this morning, the LPG shipping segment was trading at a 30% discount to NAV, and no other segment has traded at a bigger discount, not only to this year, but over the past 6 years. A lot's changed in the last 6 years. The share prices of two of these companies are roughly $1 billion. The average daily volume has been impressive. Day rates have returned to healthy levels, and the returns by this sector have been impressive. So once again, the only thing that sell-side analysts have gotten comfortable with is the notion that it's okay for this segment to trade at a 30% discount to NAV. So let's start there. Let's start with NAV. Let's talk about returns over the cycle, and let's talk about plans to return cash. And so I'll start with Anders first on this.
Okay, thank you. I guess just looking at the room, see how many people left when from the LNG sector to the LPG. I guess that's part of our problem. I think, first of all, I think LPG as a product is not well enough understood and known. So I think we as an industry have a job to do there. But having said that, I think with the energy crisis in our face, I think more and more people see that LPG is actually as a product that has very valuable. It has many benefits. It's very adaptable. It doesn't need a big infrastructure. So again, there are many benefits to LPG. We're also seeing now in Europe, of course, that with the, just increasing demand and also the difficulty of supplying enough LNG and the price, not least, it means that there will be more focus on LPG. But coming to the valuation, I think, and I agree with you, Jim. I've been speaking to many analysts, and it seems to me like they all think that, 35% discount, that's about the right level, because it's always been like that. I think in the past, maybe the NAV was hard to justify, because it was not many transactions in the S&P market. And so you could argue that, yes, the broker said some value, but it's not real. At BWLPG, we've sold 19 ships in the last 3 years. At a premium to book values of about 12%. So I would argue that our NAV is quite real. And I think also when as you said, Jim, when you look at returns, at least since our IPO, our numbers indicate that the LPG sector has outperformed all other segments when it comes to return on equity. And so over time, I guess, I think both investors will see and also customer will see that it's such an important product, and an investor will see that it's such in demand that those valuations will over time become more aligned with other segments.
Peter, in your company, you recently purchased 5 vessels.
Yes.
So you can give some clarity to the reality of NAV, but also your company is different. You deal in smaller sized vessels. You deal in different routes. You have terminals. You've secured some long-term cash flow. Take me through your views.
Yeah. Navigator, the core shipping segment for us is the handysize. So that'll be the ships that are some 25,000 cubic meters, so quite a bit smaller than the VLGCs. But it gives a great flexibility. It means that we will trade not only LPG, but we're also trading petrochemicals, mainly ethylene, and we also trade ammonia. So there are some very interesting dynamics that I won't go into a big detail on right now, but we have some good, you could say, diversity in that. Not only that, we don't see ourselves as being just a shipping company. We see ourselves as operating a virtual pipeline. And that means that we have vertically integrated by also investing into the Houston export terminal of ethylene together with Enterprise. So that gives, you could say, a different stability to our cash flows. So that combined with the long time charters that we also have, I think it should hopefully illustrate to investors that the perceived volatility of cash flows is not the case when it comes to Navigator. But we do trade at the same discount as you're suggesting. We're trading at a 30-35% discount to net asset value, and that, of course, is an illustration of the lack of confidence in the sustainability of our returns and also our capital, you could say, discipline. I'm most certain that a number of companies will follow what we've seen some of the VLGC players do in terms of starting to buy back own shares, to return capital to the shareholders and show great capital discipline. And we haven't yet, or we have not sold as many ships as Anders just suggested. But we see the same pattern here. When we're selling our ships, we're selling them at or above our net asset value. So there is clearly robustness in those valuations.
Aleksander.
Yes, sir.
You've spent a few years in the LPG business.
Maybe
More than all of us combined. Take us through your views over the next 2 to 3 years. Let's talk about some of the specific products, and let's talk about the trade routes that you anticipate as well.
Thank you, James. Sure, I'll do so. Well, first of all, thank you for inviting me here and with these two fine gentlemen. Sorry, Mats, I will start off a little bit on the VL side and of course looking at the audience here. Just a quick summary of where we are today, and to wrap up the year of 22. I mean, we are in a bubbly time for LPG. It's the prospects looks very good. We have experienced some strong fundamentals in the VL market now. I can mention a 7-year high Baltic LPG index, for instance. The total export this year will add around 4 to 5 million tons additional if you add US and Middle East. And also the arbitrage, which is, of course, such an important factor, is around 20% higher compared to last year. So, overall, I mean, when we look into our, also this year, I mean, probably we will end up around $40,000 a day on average for the VLs. There are, many factors combined when we look ahead and look at the forecasts. Of course, next year, people are somewhat concerned maybe on the VLGC side. Many new buildings are coming into the market, so we will probably see a small correction there. But, overall, it's looking very good.
So, Mats, I'll give you the same question, and please spend a little time talking about each, because you're involved in the smaller segment and many of the products. Take us through your views over the next 2-3 years for them.
Yeah, I think the outlook is very exciting. We mainly look at 3 segments. One is ammonia, the other one LPG, and the last one is petrochemicals. The LPG, I think I will leave that maybe to Anders. We don't export as much into Europe as we're seeing it's being mainly done on the larger ships. It gives a robust and solid business, and we expect that we'll continue to enjoy that strength, but I won't go further into that. When it comes to the petrochemicals, that has been a little bit dull over the summer. China stopped importing ethylene from North America, that meant that the utilization dropped off, but we've definitely seen that come back. There's been the start of a correction here in China. They are importing much more directly from Houston on ethylene ships out of our joint venture terminal in Morgan's Point in Houston. So I think just over the last couple of weeks we've seen 7-8 shipments being booked, and that means that we will have a good utilization on our ethylene ships for Q4. And we think that will continue to be the case. There is a strong structural demand for ethylene. It's a building block for industrial products, including plastic. Of course, the big caveat here is the global economy. It is a trade that is somewhat sensitive to total global demand. So we will need to avoid a deep global recession to continue to see that at its current strength. When it comes to ammonia, that's a very exciting business opportunity for us right now. If you look maybe a year back, we would have 2-3 ships transporting ammonia. Today, the number is 10 to 11, so that's a full 20% of our total fleet, and that means that it's become a very important commodity for us. And here the trading patterns have changed a lot. It used to be, for instance, that Europe would import all its ammonia from Russia or produce it itself. That has changed, of course. There's no flow from Russia at the current point in time, and also the European producers of ammonia have stopped doing so because of high natural gas prices. So right now ammonia is being transported by ship in from as far places as Australia, from Bangladesh, from North America, and that of course gives good utilization on our ships here. We think that the outlook for ammonia is particularly strong, given that ammonia will be a fuel for the future for shipping. It'll be used for co-firing power plants in Asia. In general, it has a very good influence on the emissions footprint for when you burn it as fuel. So we have great expectations about the development of the ammonia trade flows, and we are definitely very well positioned to benefit from that.
And could you just spend 1 minute talking about the possibility of LPG replacing LNG in some uses?
The good thing about LPG is that it's a very versatile commodity. It can be used as an industrial component, and it can also be used as energy. And here, I expect that with the energy deficit in Europe that we are seeing, that there are very good opportunities for LNG being imported into Europe as a substitute for LNG when capacity limits are being met. And that probably also shows why the strength is there in the LPG market right now. But,
and I think Aleksander, hopefully when you said bubbly, you didn't mean it was a bubble, but it's good times.
It is good times.
Yes, yeah, robust good times.
Yeah.
Now, I think from our perspective also, I think you mentioned the order book next year. I think 9 months ago, I would probably be more concerned about the order book, given, again, in shipping, we hear always this time is different, and it might not be after all. But given the underlying fundamentals now, with the energy prices where they are, we're seeing good volumes both from the U.S., from Middle East, and so that, and also, of course, within the LPG segment, we can no longer pre-book slots through the Panama Canal. That's going to also create quite a few inefficiencies for us. And with regulations coming, a big part of the fleet will have to do something, as we've heard other people talk about. So again, I think both the supply side and demand side look so strong for LPG. So I think we're quite comfortable. Also, just listening into some of the previous discussions today, LPG could actually be an important fuel, for quite a period. Everybody talks about LNG, and I'm not sure anybody's burning LNG if they have an alternative these days, because it's just too expensive. LPG is actually a great, also, transitional fuel. So that could also be some additional demand.
And Alexander, if we think back over the last decade, the demand side of the equation for LPG has never been the problem. China drinks everything you bring to them.
Yes.
The supply side has been the question mark on a couple of occasions. Talk for a minute about what you expect to have happen on the supply side.
Yeah, well, I mean, indeed, I mean, if we look at, you mentioned China being the biggest importer, I think when we calculate 97% of the VLGCs, they carry all the LPG into China. On the supply side, obviously, US has become the large exporter, and, in terms of the ton miles being created as a result, also Anders touched a little bit about it. We see next year, for instance, is about 46 new buildings coming to the market. Can this, the total VLGC fleet is around 330 ships, 333 to be precise. So, you are talking about a substantial new building coming in. So when we do all our equations and look at, the Panama congestions, we look at any delays both in the ports, we have all these equations together, and our demand factors, it equals to about 56 additional vessels. So, it is, we are not worried about the new buildings coming in. And we do think, we will see a small dip in the market, probably, a small correction compared to where we are right now. But we are not concerned, and the volumes will continue to be exported.
Mats, I'm going to give you a very similar question. Let's talk about the export capacity from the U.S., and let's talk about, to a lesser degree, the ability to absorb the fleet next year.
Yes. When it comes to export capacity here, ethylene is a big driver of our business, and we have invested in 2020 into a 1 million ton export facility together with Enterprise. And it has been ramped up during 21, and right now it's running at full capacity. There was a little bit of softness in Q3 also, but that has recovered well. Enterprise has publicly stated that they would like to expand that capacity, and we have also been saying in public that we are in discussions with Enterprise, and we are happy to continue developing that joint venture with them, so that we expect that will grow and be a larger proportion of our overall business. And we would also be interested in building similar relationships with other, that could be, for instance, ammonia producers, exporters, to do a similar type of integration. We see great commercial benefits from being close with the terminal that exports it. It gives us good intelligence on how to position our fleet and operate it. So there are a lot of synergies, and also, of course, the stability in the cash flow that it creates is great for us.
Your business is a little bit more complicated than the average shipping business, and certainly than the average LP. Take a few minutes and take us in relative detail through the combination of vessels you have, assets you have, joint ventures you have, so that people can understand the parts better. Yeah,
I mean, we own 53 vessels. Most of them, 39, are handy sizes. We are, as you mentioned before, also we bought 5 additional ones from our partner, Greater Bay in China. So we'll have up to 58 vessels, mainly centered around the handysize. The good thing about handysize ships is that it's relatively versatile. Most of them have what's called ethylene capacity, which means that the ships can cool down the cargoes down to minus 103, which makes the ships extremely versatile, so they can transport all the different types of commodities that we have been talking about. But of course, that also is a challenge. It means that it requires smart people to operate those ships and to make sure that they can take the right cargoes at the right time, that they've been cleaned up the way they should between switching cargoes and so on. So it is a complex operation, and that means, of course, that also the entry barriers for newcomers or those some that would like to enter the business, they're quite high to climb. So that makes it a niche that is well protected.
And your terminal business represents something like 20% of your EBITDA?
Yeah, just below 20% of our EBITDA, and we expect it to climb higher once we continue and finalize the current discussions with enterprise. So it is a growing part of our total business, and we think it creates a great complementarity to our shipping business, which is very cash generative, of course.
And Anders, we touched on this earlier, but I want to get more of your view on the ability to absorb the 2023 fleet. I remember you saying 9 months ago that it was the elephant in the room, and now it's a mouse or some mosquito.
In the room.
Okay.
Yes. I really do think that in the environment we see the desperate need that Europe has put itself into when it comes to energy, and so. And we actually, even before thinking about the additional demand to Europe, I think we're quite comfortable with the underlying fundamentals, before this happened, So we're not experiencing any lesser demand or any shorter ton miles, because Europe is more active. We're still seeing the same trades, so the European demand in many ways is additional, and so again, with those underlying fundamentals, with nice growth, and we see, of course, in the U.S. I mean, Europe is totally dependent on two places: there's Middle East and the U.S. or the world is dependent on for energy sources, and LPG. We're lucky in that sense that if there's demand for LNG or oil, we're there along. We're a byproduct, and it's always going to be there. So given those fundamentals, and given again the inefficiencies, and as I say, the regulations will take out some capacity also. So we haven't, we have our own numbers internally for what we think it is, but I think it's still, that remains to be seen. Of course, the EEXI will sort of happen right away. The CII, we won't be able to, see the results really before another year and a half. So, but in total, we feel that the balance looks quite good for next year.
And Anders, similarly, take a couple minutes and take us through what your business looks like, what the vessel profile is, and your recent acquisition of the trading business.
Yes. So we have 39 VLGCs on the water, owned or operated. Our trades are very much from the U.S. and to the Far East, and from also Middle East, and particularly to India. And we have also made a decision, and I listened to again the panels earlier, and we have also made a decision 3-4 years ago to invest in new technology. So we have actually retrofitted 15 of our ships to be dual fuel LPG vessels, and I can assure everybody in the room that that's actually been very successful. We did those things on time and budget, even during COVID, and we're seeing great results. Yes, there's always teething issues with new technology. But I think the experience we're gaining and the benefits we're seeing, both from the environment perspective but also economically, is great. And I think, and I'd like to actually make a statement on this. I mean, I think as an industry, the whole shipping industry, I mean, it really is time to show some discipline. I mean, we are the leader in our segment. We said we're not going to build new. We think that's, the footprint from building new versus a retrofit, it's much greater. So I think if we can show that discipline, and I think there's plenty of opportunities to use existing vessels, to move in the right direction. So to us, that's a big investment, but still, I'm very happy to invest $130 million and get 15 ships within the latest technology, and to buy one ship at the moment at $95 million.
And take us through your recent acquisition on the trading side.
Yes. So again, we of course saw as a leading ship owner, we saw that many of our customers were starting to order ships and own ships, and really becoming ship owners in addition to traders. And of course, so in order for us to protect our position and to see how can we both take a greater share of the wallet in that market, but also protect our position and get better information and so forth, we then decided 3 years ago to enter into product trading. We've done that now for 3 years, and in a limited fashion, but to learn about the business and to get comfortable with it. And now just recently, as we just announced, that we're acquiring the LPG trading business from Vilma. We're still waiting for final authorities to approve this, but within 3 or 4 weeks we expect that to happen. And that is going to give us we think a really much more optionality, flexibility in how we run our business. It will give us additional revenue source. It's also a good way for us to, over the cycles to protect the downside. But the most important thing is it gives us opportunity to enter into new types of contracts and gives us much better information on the product.
But maybe I can just
yes.
add to what Anna says here, that I guess we're just listening to the capital markets asking us to maybe show a slightly more stable cash flow profile, and that's why we are doing as we are, both Navigator and BW. But I mean, rest assured that the capital discipline has definitely also been something that has been picked up on, and that's what we've seen in the industry, that share buybacks and dividend policies and so on has really found its way into our sector. So I think that capital discipline is something that has been high on the agenda for most all of us.
No, and a lot of companies within the segment have paid much bigger dividends than the last year, and big share buyback programs. Take us through what you guys, BW, has done in the last year.
Yeah, and we now have a dividend policy paying out 75% of our net profits on a quarterly basis, and of course we also have a buyback program, and which you know we actively use, and of course our balance sheet at the moment is too strong. I have to admit that, given that we were somewhat concerned about next year some while ago. At the same time, I think the range of outcomes, you know, given still the uncertainty, I'm very happy to have a strong balance sheet. But of course, over time, it's important to make good decisions. But we'll continue to if we can sell ships at well above NAV and buy back shares at 30-35% discount, we'll do that all day long.
Okay, Aleksander, crystal ball time.
Crystal ball time. Yes.
Day rates over the next 2 years.
Well, I mean, again, we have touched upon it already, and you know, we are very optimistic on the VLGC side. Maybe a small dip next year due to the correction of the new buildings coming in. We are not too concerned. When it comes to 24 and 25, so, you know, you're looking on the VLs, you know, we are approximately landing around $55,000 a day in 24, and slight around 50,000 for 25. So now you're talking about a substantial increase. And you know, one thing which is interesting when we're talking about all these demand equivalents, and you know, with the new environmental regulations coming in next year, it's interesting to observe that probably, again on the VLGC side then, but you know, 1 knot that 50% of the VLGC probably has to reduce their speed with about 1 knot. That equals to, you know, when you transfer to ton mile, around 10 VLGC equivalents. So, you know, this puts it into perspective. You know, when you're talking about trading routes and you're talking about vessels, you know, still the Panama congestion will be a major factor in being involved here. So, you know, we are all optimistic. And also for Matt's point of view, and on the mid-size and handies, we were somewhat a little bit more concerned, mainly due to, you know, the LPG and the more regional movements. Now with the ammonia, and that's something we have foreseen for some time, but it just happened. Of course, Yuzhny from Ukraine, all of a sudden, not there anymore, or heavily reduced the export. So this has helped a lot and created new routes for the handies as well as the mid-size. So, you know, we are overall, you know, quite firm going forwards.
And Mats, on the vessel side, what's your cash or OPEX break even?
We have, it depends a little bit on what you include, but I mean, we have typically an SG&A cost around $1,200 per day. We have an OPEX per day of some $8,200 per day. And then, of course, depending on what you put in terms of assumptions around depreciation and interest cost, it's going to come up, you could say, in the mid-high teens in terms of cash break even. But of course, having rates that rarely go below 20,000 per day and currently are moving around the 2025, our industry does not really reach that cash break even level at any point in time. We haven't seen that at least historically. So right now, as a company, we have a very robust balance sheet. At the same time, we have delivered quite a bit, and I don't think we should deliver any more, which means that we will have cash ready for redistribution. About 3.5 times EBITDA is our current net leverage level. So yeah, pretty resilient break-even levels and a robust balance sheet. I think that's a good combination.
Thank you. Anders, with expected day rates north of $50,000 a day, give us whatever detail you'd like to in terms of OpEx and cash break-even.
Yeah, no, I think our sort of total all-in cost is around low 20s, around 21,000. So those levels will smile quite often. Of course, our rates business is more volatile than the MODS's, and so we have experienced times when rates also come down below that. But again, given the balance and again given the outlook, I'm not going to make any forecasts on rates, but we certainly believe that it's going to be a robust market for the foreseeable future. And of course, also in the short term, we saw the inventories in the U.S. are really picking up, and so the first quarter this year was a little weaker than expected, but I think it's looking quite healthy going into the winter.
Let's talk about fuel propulsion and fuels of the future, and I know a couple of prior panels touched base on this, but I'll start with Mats on this.
Yeah, I think we are a tramp business, so that means that we don't know what our trading patterns will be. So when we fix a ship, it may end up in Asia, but then the next journey we're not quite sure where that's going to go from. So that means that we're pretty dependent on having fueling or fuels that are widely available in the market. But of course, having dual fuel technology, there are some opportunities in that. We will likely not go out and build an ammonia-propelled vessel without having, you could say, an understanding or contract against it. But those are starting to come. We're starting to see a number of ammonia producers that want us to bid for the production or the building of an ammonia-propelled vessel to service green or blue ammonia trade lane. So it's coming. We don't have, you could say, the contract's quite ready for signing yet, but I think definitely within the next year or two, we'll really start seeing the first new buildings coming in that will be ammonia propelled. Given that ammonia is such an important commodity in our segment, I'm most certain that will be the fuel of the future for our part of the gas tanker sector, as opposed to methanol.
And just give us your best guess as to what this rollout of use of ammonia will look like.
Yeah, I think that it will definitely start in those trade lanes where the production of the ammonia, the green and the blue ammonia, is in the one end, and then it goes wherever it's going. So there'll be some long-term contracts that there will be a shipbuilding program up against. So that's going to happen within the next 1, 2, 3 years. So we'll start seeing the first new builds entering or being ordered. Then it's probably going to take 5 years plus before we start seeing a more broad-based ordering of ammonia-propelled ships, simply because the infrastructure and the ports will need to catch up. So we need to see those key fueling places in Singapore, in Rotterdam, in Houston, before it really starts taking off. So it's going to be a few years before we see, you could say, ships that are just built for free renewal and not purpose-built being driven by ammonia.
And Aleksander, even though this isn't your specialty, you've been in shipping for too long not to answer this question as well.
Yeah, well, I mean, for sure, like Mats touched upon, we are not there yet when it comes to dual fuel ammonia technology. We need to keep in mind we are talking about a highly toxic type of gas. You know, the technologies are moving forward, but we'll get there. On the VL side, I mean, it's more current order book of 70 ships now. I mean, I think all of them are fitted with dual fuel engines. Obviously, these engines can run on both VLSFO and also LPG. And some of these are suitable for running on ammonia as well, but there's quite limited so far, and we are not there yet. I mean, there are many still challenges from engine makers when it comes to everything from ventilation to the complexity of ammonia. So until then, I mean, LPG. It's cleaner, most cost efficient that we have today, and the order book is a proof of that. And also with Anders' retrofit ships, 15 in total. So it makes very much sense. When it comes to ammonia, I mean, I think that trading patterns for ammonia, is getting a bit. It's not about just changing grades between ammonia and LPG. It takes a long time. For a VLGC, you're talking about cleaning of 20-25 days only. So we will see VLGCs or carrying ammonia probably within 3 to 5 years. But they will be on special trade routes, and so you will have a diversified fleet, ammonia fleet as well as LPG fleet. That's our view on it.
Thank you. And Anders, same question.
Yeah. No, I mean, ammonia clearly is something that we're watching very closely, but at the same time, we don't see that being an alternative for quite some time. And I think, as Mats touched upon, I mean, the infrastructure is important. Of course, we need, the right kind of ammonia. And so, and I've actually tested also our team, the last two. I was told that it was not so difficult to go from LPG or LNG to ammonia. So I tested my team on the last two retrofits. I said, fine, make them ammonia ready. And 3 months later, they came back and said, well, it was harder than we thought. There's too many issues still we need to deal with. And so, and of course, just our older ships, we can still transport ammonia on those. So we know ammonia, understand it, but at the same time, it's again, I think that's many years out. And we hear about many initiatives, which I think is great, and we really want to be, we're spending money and time to look into it. But for me, right now, especially for the LPG sector, I mean, dual fuel LPG engines is the right thing to do. And I think even for many other segments, I don't see if Herman is here, but I told him here the other day that if he wants optionality, call me.
Okay, assuming that Nicholas invites us all back next year. Mats, what are we going to talk about next year?
No, I think sustainability is going to stay high on the agenda, and particularly for our segment, because we have the expertise in moving both toxic and also hard to handle types of fuel. So we'll continue to be a key player in that whole energy transition. I hope that the macroeconomic volatility that we are facing right now is going to be something that we'll look back on and not forward to. So I hope that that's going to be gone. So I hope it's going to be about the development of the business, about the returns that are being created in the industry, and how we make sure that capital is also distributed back to the investors. So, yeah.
Aleksander, what are we going to talk about next year?
Well, at that time, we have probably opened the champagne already, but, again, it will be interesting to see, we are just at the starting phase of the environmental issues, see how the fleet will adapt to it. I mean, we have done our calculations, and like I mentioned, for 50% of the VL fleet needs to reduce their speed with about 1 knot, and we will see how that actually will sort of, as more as we learn about it and see how the fleet will adapt to it, it will be interesting to see. We are also very, the petrochemical market is also a very interesting and challenging to forecast, I must admit, after 25 years of this industry. If you try to forecast 1 year ahead on ethylene, it is, due to imbalances, or, one thing is the enterprise export, another thing is the PDH plants in China will have major factor to it. But hopefully our predictions will be in line, and that both Mats as well as Anders will probably see the share price increase.
I'm glad you said that, because they can't. So Anders, what are we going to talk about next year?
Well, we're definitely going to talk about, there's some experience then with new regulations, and we'll see how that has played its role. I hope and think also that there will be more realism. I think Dag Kielen mentioned and showed us some interesting graphs earlier. And I think, hopefully, the world is moving to a place where we go for real action, not for a lot of talk. And I think in our industry, I think we're doing a lot of things. And I think we should be proud of many of the steps we're taking. Sustainability is important, but we also need to prioritize where do we really put our focus. And I think as an industry, we should also remind our friends in the governments and politicians that we're taking many steps, but at the same time, the key problem is not us. But we'll do our part. But I think there'll be more realism and be more focus on real action and not on just a lot of talk.
I think we've got less than a minute left. If there's any questions from the audience, we have time for one. Yes, I saw a hand back there.
I have a very loud voice, so I'll just scream if that's okay.
Sounds good.
I apologize, but I don't know if you specifically addressed, in Europe, how much capacity is there to actually increase LPG import? We talk a lot about the exports, but in terms of the import capacity globally, what capacity utilization is on the current import structure?
Matt, you want to take that, or?
Do you have numbers for Aleksander? What we at least our estimate is that we will see imports into Europe next year growing from about 9 million tons to 13, 14. So that's our sort of forecast. But again, breaking it down for you, I wouldn't be able to. I think we see clearly that substitution. We hear it's substitution. But also many of the companies will keep, their cards close to their chest. They're not going to say exactly how they're playing this. But we see, and again, a large Norwegian oil company, typically they will have a couple LPG cargoes per month, and we don't see that anymore. So we suspect that that's going into the LNG stream. So, but again, I don't have good numbers.
No, and neither do I. When I talk to my team, they say it doesn't seem to be that there are any bottlenecks in terms of importing LPG into Europe. But we don't transport as much into Europe, so I don't have numbers to present either. But yeah.
No, I mean, a little bit like Anders also touched upon, when we see today's natural gas prices, most of the export, let's say, from Norway and Equinor is injected into the LNG. So, when you look at Europe in total, and the fleet diversification, compared to where we are today, we are modest when it comes to Europe. I don't want to mention any numbers either. But again, for us, it's all about Far East on LPG, and that is going to be the main drive going forwards.
Panelists, thank you very much. Audience, thank you for listening to us.